Hi, thanks for joining me on my market report. My name is Mike, and a market report is on mortgage rates. We kind of like to get into the impact, providing information on the impact of mortgage rates on any given day on a daily basis. We kind of get into the economic data, if there's any, or any headline news that might be impacting the rates, or geopolitical items, or even if there's a sentiment that got changed, so that maybe good news becomes bad news, or vice versa. We kind of let you uh, hear the inside scoops on that. Now, if you're in the market to refinance or purchase, you're probably following the mortgage rates. This is a great video for you guys to watch and follow us. We're here. A little bit about myself, as I am a loan officer. I do work with a national lender, so we're here to help. We'd like to earn your business, so please reach out to us if you're looking to refinance or purchase, and see what we can do for you guys. But we're also here to avail here as a source if you guys got just questions about things, whether if it's about where mortgage rates, or if you got questions about mortgage plan or programs that might be available out there, or just what have you. There's a lot of different things out there we can answer for you guys, and be more than happy to answer for you guys. Uh, in the meantime, why don't we jump right into this? We'll start off with the economic calendar here today. We'll start off with the Case-Shiller Home Price Index, and this is a gauge that it gauges the 20 largest markets in the U.S. here. So we'll start off with July. It started off at 1.5% month over month. Forecast is supposed to keep that same trend 1.5, and it dipped a little bit down to 1.2%. So it's year over year went from 19.9 that in July. That got revised slightly higher to 20%. It was supposed to keep that same percent at 20%. However, it went the opposite direction, went to 19.7%. Now, we also got another index here for HPI, or Home Price Index. This is the FHFA home price. Now, this gauges the conforming limits of the U.S. Programs out there. So, its July number was at 1.4%, and it slowed down to 1% month over month in August here. So that brought its year over year from 19.2% down to 18.5%. Now, we have been talking about sales have been slowing down a little bit in the fall, heading into the fall, and so that's a great time for first-time homebuyers to maybe jump into it, because we don't have as much competition. Now, the inventory is still low, but it's still a good, better time than we were seeing earlier in the year for first-time homebuyers, and this gives them a better opportunity to be able to actually get into the market and maybe get a property for themselves here. So that's just a little tidbit on the side here. Let's move on. We got consumer confidence for the month of October. So September's number was revised slightly higher from 109.3 to 109.8. Our forecast was calling for a little dip in October at 108.3. However, it didn't dip; it actually increased to 113.8. Now, we also got new home sales for the month of September. It's its August number was revised slightly lower from 740,000 to 702,000. These are seasonally adjusted units, and forecast is calling for uptick to 760, and it jumped all the way up to 800. So we had a big uptick in new home sales, which is obviously very good news for the housing market. And that's about it for the economic data here. Now, let's take a look here at mortgage rates, see what MBS is doing today. Now, we started a little higher. We closed yesterday up 20 basis points, which helped us out here. We started a little higher, but we did come back a little bit. We're now right now we're down about -3%. So it's not enough change yet for one, especially not lenders have come out with pricing for any change in the rates. So rates will be the same what we saw yesterday, unchanged from yesterday. So we did get a slight improvement here yesterday, which is obviously good news. But the good news is that we started higher and we pulled back. So this is still kind of keeping a trend of going upwards. So this still could work its way back later in the day. But right now we are at right now even worse than look again down 5 bips. So again, but it's not enough to change any the mortgage rate itself. We'll show you the volatility of the day. So as you can see here, we dropped a bit here, then came back here. So we started off higher, all the way up to 102.44, all the way down here. And go back. And the 10-year Treasury, we're down to we're trying to break this line here. We did kind of start slightly below it, and we're working our way back. We're right at about 1.63 right now, and that's pretty much it on that. But national averages, we'll go back to here. 30-year fixed right now is at the 3.27 range, and 15 years at 2.64 range. So these are national averages. They do have points built into them. So if you guys are looking around, this is kind of the bar of roughly where rates are at. So there's a lot that goes into rates, whether if it's amount of equity in property, if your occupancy, if you're the type of building, equity in the property. So there's a lot of different factors, FICO scores, a lot of factors that go into it, that goes into rates. But this is kind of just a rough estimate of what it might look like. All right, folks. Hopefully you got something out of this video. If you like it, please smash that like button. Especially if you guys are hit the follow, we'd love to have you guys follow us as well. If you guys got questions about anything, please feel free to reach out. We're here to help. Thanks so much for watching. We'll see you in tomorrow's video. Bye-bye.